What's up, guys? Welcome to Multidimensional Trading video series. This is video number 3 or part 3. So today we're going to get into the bullish order block. There's also such thing called the bearish order block as well. But once you understand the bullish order block, it's the same thing as the bearish order block, just reversed. I originally heard of the term bullish order block or bearish order block through a great trader, a great teacher named ICT. And the concept works flawlessly, especially when trading high frequency trading on the NASDAQ, right? The reason why it works so well is because large institutions, they can't just press the buy button and get into their trade all at once. They kind of have to do it in at least multiple parts, at least 2 parts. They have to do it in, and it's visible. They leave a certain footprint on the chart, and it's visible to see when they step in and how we can take advantage of that, so we can ride that trade and go with the flow of the large orders. That way we can not be against that grain, because you don't want to be against someone who's pushing contracts up, pushing the price of contracts up. We want to be going with that flow. So we look for bullish order blocks. So here on this screen, this is micro E-mini NASDAQ 100, NASDAQ 100, right? Here we have a bullish order block. This is basically this order block on this 1 minute. This bullish candle is a block of orders, right? For someone with a lot of money, basically institutions or banks or family offices, someone who's putting in a lot of money or buying a lot of contracts, when they buy, they're going to push that price up pretty high. So their average price isn't going to be low, right? So say they buy here and they push that price all the way up to 27.77. Okay, everyone jumps in, they're pushing price up, everyone starts buying, and then no one else is buying after that. Price just kind of dwindles down, everyone starts to sell their contracts, everybody gets excited. Maybe other people put on size here, it pumps a little bit, everyone gets excited. They have to sell their contracts because their stop losses is right here at the lows. And what are their stop losses? Sell orders. So that comes on down, and then when price reaches that bullish order block again, that same institution, those same big buyers are going to step in and buy another share of their position, so they can ride it up and actually make some money. They can't just buy it all at once, and they would be the only ones pushing the price up. Okay, they need to be able to get a decent average price, and then everyone else can come in and buy and drag the price higher so they can sell. Okay, so let's imagine if they bought here and they got an average price of 27.7, and then they bought here again and they pushed the price back up to 27.77. So they have about an average price of 27.77 on the NASDAQ. Anything above that is all profit for them, right? That's all free money at that point. But they couldn't just get like the bottom lows like we can do. Okay, so if we're buying 1 or 2 contracts, whether it's Bitcoin or NASDAQ or whatever instrument you might want to trade, you can just press the button and get the lowest and best price on the chart that you can physically see, that you can objectively find. If you had a large amount of money, you're putting in $100 million, $1 billion, you can't just do that all at once and then try to make money, because everyone's going to be eating off of your back. So this is what we could do and how we can take advantage of when institutions make those large moves and put those large order blocks in, is when we recognize this object, right? We always have to stay objective. Once we recognize this bullish order block, this bullish object right here, we know when price comes back down into this block of orders, right into this area, this is where we want to be having our limit order set. This is where we want to see what happens to price. If price gets pushed back up, we can just start buying because we understand what price ran into. So we understand what we could do, and how we could take advantage of it, what our next moves would be, how we should respond, right, when price gets back into that order block. So we understand how to respond, and we respond by taking a buy order right here in this area, right? Because here's the bullish order block. Price went up, don't go back down because it's not about to take off yet until they get their second fill. So here comes the second fill. Boom. We can go with that flow now. We can get in. We can ride that up. And if you bought here in this order block, it's about 27.23. If we do the range, about 733 to 714, about a 15 point range right here. And then out, back into resistance. Here goes 862. That is a lot of points right there. You go ahead and do just the middle of that range. Let's see. Just the middle of that range. That is 138 points. That is crazy. We only really need about 50 to 100 points to be done with the day. And that's just one solid trade and you're done. That's it. One solid trade. If you look for that one setup on the NASDAQ or Bitcoin or whatever trade that you're, whatever instrument that you're trading, you're going to find it. And then when you find it, you take that right there. You understand what you're looking at objectively. You understand what this object is. You understand, like, okay, well, dang, we had a lot of buying pressure. This is a bullish order block. When it gets back to that area, I'll take the trade. Or you could just wait for it to react, and then as you see it's pushing up, you're like, okay, well, it's bullish, they're buying again, and then take the trade and get in. You don't have to just buy just because you see it, right? Because there will come a chance that that order block will no longer be valid, and it'll just run through it. You could wait for it to get into the order block, see if it actually gets pushed back up in price, and then jump in. Okay, and now you know, okay, well, I know why it's getting pushed back up. It's not a fake out because it just ran into that bullish order block. They bought before, and now they're ready to load up and buy again. And I'm going to ride that wave with the institutions. I'm going to ride that wave with the banks. I'm going to make that money along with them. I'm not going to go against the grain because we can see their footprint on the chart right here. They had a bullish order. We had this block of orders, made the chart go bullish. They will buy again to defend their position and to add more onto their position to dollar cost average so they can make some money today. Okay, they'll be good if, say, their average price is 777. Okay, that's almost 100 points for them. Got to 8666. Yeah, it's about 866. Yeah, that's almost 100 points right there for them. If that's what their average price is, that's a lot of points. If you're playing with $100 million, $500 million, that's a lot of points, right? You're eating very, very well. Okay, that's a very good trading day for an institution, for anyone, right, of any account size. That's why we can ride that wave with them. So that's pretty much the bullish order block in a nutshell. For the bearish order block, we'll go ahead and take it right up here, because remember, this chart is live here, guys, so you can see what I'm doing, and if the chart's still going, this is live. So the time is 10:46 my time, 10:46 on my computer as well. Okay, so let's go ahead and I'm gonna change this to, let's see, my bad, bearish order block. Okay, you can see exactly what I'm talking about before I even really pointed out. That's it. Same concept. Okay, same exact concept. Why is it bearish? Why is the price selling off? Well, what happened? We ran right into a bearish order block, bearish order area, right into this block. Let me change the time frame. Look at that, bearish order block. Okay, not to also forget we have multiple confluences, right? Which we also ran into the 369 EMA, which gives us another very strong confluence that is also going to be resistance. That is also going to be a roof, right? That's where we could take a short trade, right? That's where we could eat on the short side as well, okay? Or it could be where you take your profit. You understand that, okay, it's probably going to get weak back into that bearish order block. It's probably going to get weak when it touches that roof, that objective ceiling, which is the 369-day EMA. I have too many reasons why price would get bearish right there, why price would sell off. I have multiple reasons, I have multiple confluences why price would sell off there. I'm going to get out of my trade either before it hits, or I'll have my take profit set around right there when it'll hit and it'll liquidate me and I'll get out of the trade. Okay, using the multiple confluences is A1 because you have more confidence into what to do and how to respond when price reaches those areas. Okay. Ran into this bullish, this is the top, so this bearish order block. And now, as you can see, we've ran into this bearish order area, plus we ran into the 369-day EMA. The first time it ran to the 369-day EMA, it sold off, went all the way back down. Okay, ran right back into that bullish order block. Came back up, hit the bearish order block and the 369-day EMA, and sold off. The price is really just doing the same thing over and over. It's doing it once on the long side, which was down here. It's doing it once on the sell side as well. Okay, and all you have to do is recognize where it's at, the objective trade, the objects that are on the chart, so you can take that objective trade, right? The bullish order block was very visible here. We got that huge pump, and then it's not like it just came straight back down, right? It sold off and slowly sold back off, and then finally came back into that area. They had to wait a while today to get back to that area so they can buy again. And what did we do? Buy right along with them so we can ride it up. Okay, now we're not going to try to buy anymore because we know we've entered a bearish zone. We entered this bearish order block here. We also know we have another confluence, which is the 369-day EMA. That's a roof. That's a ceiling. We're not going to sit there and buy at a ceiling. Okay, we will only buy near the floors, near the lows. Buy low, sell high. Okay, that's the name of the game. If you can stay objective and look for the bullish order blocks, the bearish order blocks, the 369-day EMA, the equal highs, the equal lows, and you put all of those things together, you have multiple reasons why you should take your trade. You have extra confidence into why you should take your trade, and that's how it works together. That's how you put those concepts together. And you use them, and you practice with them, and you paper trade with them, and you get used to doing it consistently every day, as many hours as you can put in. That will get you to where you want to be as a profitable trader. Okay, This has been video number 3, part 3 of the multidimensional trading video series. Like the video, guys. Subscribe. Part 4 will be coming soon. Video number 4, lesson number 4, part 4 will be coming soon. Practice paper trade. Take these concepts, watch the videos over and over. If you miss anything, you watch it twice. You're probably going to catch something that you didn't hear clearly or accurately the first time. Or you go out and do it and then say, oh yeah, I've experienced that. I know what that looks like. I know what that means now. Okay? Bearish order block. Look at that. It's bearish here. We're not gonna buy here. Okay? We're not buying here. We'll buy here where we have that bullish order block. We'll sell here when we run into that bearish order block. And we also check our other time frames, and we can see we have a 369-day EMA acting as a roof, acting as resistance. Simple as that, guys. Like, subscribe. I will see you in the next one. Peace.